Are you a Tesla stock owner? If so, ascertain the return on that investment. If not, find out if this is a worthwhile endeavor. Pay attention to the details and stay in the loop. Like an electric vehicle or EV was unimaginable to previous generations. Even more amazing is the concept of AI-powered automobiles. Artificial intelligence, or AI, was not a common concept in the early days of civilization, but it is now part of people's daily lives. Having said that, a large number of investors have been buying Tesla stock. The industry leader in this regard. Watch today's video to learn why Cathie Wood said the Tesla sell-off is finished. Tesla is an American automobile and sustainable energy firm that creates, develops, produces, leases, and markets energy generation and storage systems, as well as electric vehicles in the US and other countries. With aspirational and environmentally conscious objectives, Tesla rose to global recognition. You will learn why Cathie Wood said that the Tesla sell-off is finished. As previously mentioned, let's start by defining a sell-off. A sell-off is by definition the sale of assets, usually at a discount with the purpose of getting rid of them, as opposed to a regular trade or just the selling of stocks, bonds, or commodities, particularly if the selling results in a price decline. A sell-off happens when a lot of securities are sold quickly, which drives down the price of the security since more shares are offered than buyers are ready to take. When market sentiment becomes more negative, the price reduction can quicken. Active Shanghai plant suspends some shipment after COVID cases. This news, which was caused by unanticipated events that spread throughout the world, had an impact on other firms' stock markets in addition to Tesla's. First of all, there is a company that supplies parts to General Motors and Tesla that has come under suspicion when two of its employees became infected with COVID-19. It was put on hold at the time because Shanghai, the capital of China, had enforced severe measures in response to the COVID-19 outbreak that was sweeping the world. In the aforementioned nation, the majority of factories were placed on lockdown for a few weeks, while others took months to reopen and eventually had difficulty catching up. Tesla was impacted by the lagging process, even though they were eventually able to catch up, because the lengthy lockdowns also had an impact on the export process. Stock markets were then impacted by this, which in turn had an impact on the economy. In other developments, the current president of Indonesia has declared an intention to meet with Elon Musk to discuss nickel, a raw element that may be used to create batteries. This will undoubtedly give Tesla owners confidence in their investment. This is both important and pertinent at the same time because supply chains have been a major problem for electrical companies. Additionally, the president of Indonesia is meeting with Elon Musk to discuss Tesla and a possible supply of nickel. Just think of the advantages if this happens. Why are Cathie Wood's remarks considered credible? And who is she? Cathie Wood, as an American investor, a renowned stock picker, and the founder, CEO of ARK Invest, a $60 billion corporation that makes investments in cutting-edge technologies, including genomics and self-driving cars, according to Forbes, because of her ability to persuade others with her investing arguments and her track record of success, supporting her surprisingly astute claims. Cathie Wood is frequently referred to as the most underappreciated investor in the game. Cathie Wood offers monthly updates on a variety of topics, including innovations, expectations in her area of expertise, monetary and economic policy, and her thoughts on Fed decisions. The United States Central Bank, the Federal Reserve System, or Fed for short, is in charge of overseeing the country's financial and monetary systems. Cathie claimed in a recent video that the Federal Reserve's decision to boost interest rates by 50 was incorrect. She also added that as China and Europe are currently experiencing recessions, the United States may also experience one. As a result, she concluded that the decision to raise interest rates is incorrect because there is currently significant pressure on both the US and worldwide economies. Cathie went on to say, our company's current valuations are lower than the NASDAQ when viewed from a variety of perspectives. Furthermore, as I previously stated, we don't think the NASDAQ, and especially not the NASDAQ 100, offers as many chances for disruptive innovation as our strategies do, as in reference to fiscal and monetary policies as well as economic market indications. She declared that the Fed would have erred in its decision to raise interest rates to 50 basis points. She also acknowledged that the Fed is making a mistake and stated that the markets are responding. She said there was a spasm in the stock market. The S&P is now only 15 at its highest point. Conversely, the NASDAQ has dropped 25 from its highest point. Our kind of pure play innovation strategies are down to 60-75%. Thus, it's more than just a convulsion or spasm, Wood added. Investors should take note of Cathie Wood's remarks, as she is well known in the financial world. She went on to say that it is not entirely untrue for people to believe that innovative businesses that do not fall under criteria are facing the end of the planet. The tendency to move towards benchmarks in risk-off environments is a huge inefficiency, Wood stated. The similar behavior of blockchain technology, cryptocurrency assets, and the genetic revolution is absurd. In reality, even from the inception of COVID, there was a strong correlation between crypto assets and the NASDAQ. There was absolutely no association prior to that. Therefore, we believe that this is a major aberration that will eventually correct itself, and the inefficiencies will be reintroduced into the market. Please remember to hit the like and notification bell buttons before we continue with this video so that you can receive updates on future ones. Returning to the stock market, given its current state, it is thought that a U.S. recession is very likely. The state has already gone through one recession, which is defined as 2 quarters in which GDP decreases. Another appears imminent perhaps in the second or third quarter. Let's say that it was positive throughout the second quarter, but became negative during the third. In that instance, it isn't strictly speaking a recession, but for Wood, it comes quite close. Inflation is making headlines a lot these days, and Russia's invasion of Ukraine and China's zero COVID policy have caused serious problems for supply chains. These factors contributed to the PI's increase of 11.2% and the CPI's 8.5% increase. The personal consumption deflator increased by 5 points. The Fed is primarily concerned with the core PCE deflator, or core-to-core personal consumption expenditure deflators, which do not include food and energy because they are deemed to be highly volatile. 5.2 inflation is more erratic than the actual core rate. Wood stated towards the end of her video that innovation solve problems might become a new catchphrase. This is in line with margin degradation, which can be resolved by using more automation and raising productivity. It may be bringing disappointing profits to companies that are not controlling their expenses. The speaker stated cutting expenses and maintaining margins could be accomplished by implementing creative tactics. Nevertheless, at least from a traditional perspective, Tesla stock is still overpriced, but a stock is more than just its market capitalization and earnings. For nearly 10 years, TLA has been essentially overvalued, yet its price has continued to but recently, Tesla's stock price has been sharply declining. And it dropped by 5.88% and is now trading at $724.37. It should be highlighted, though, that a variety of causes contributed to this sharp decline, and Tesla is not the only firm seeing its stock price fall. This is the result of numerous unanticipated events that have occurred worldwide. One pandemic that had a significant impact on manufacturers was COVID-19. The economy was impacted by the conflict between Russia and Ukraine as well. However, the data below shows that Tesla continues to lead the electric vehicle, or EV, market. On December 28, 2021, Musk said that Tesla has sold $16.04 billion worth of stock since early November, which represents about 10 of his ownership position in the business. Tesla's German plant, located close to Berlin, formally inaugurated on March 22, 2022. This plant will complement Tesla's auto assembly factories in Shanghai, Texas, and California. Additionally, Tesla revealed plans to split its shares at its 2022 annual meeting, subject to stockholder approval, on March 28, 2022. This move will increase the company's authorized number of shares. Additionally, on April 20, 2022, Tesla revealed its first quarter 2022 net profits of $3.03 billion, surpassing Wall Street projections as revenues increased by $81 to $18.08 billion. Recent article in Barron's magazine, an American weekly magazine newspaper covering market trends, essential statistics, and U.S. financial information, suggests that this is a good time to purchase Tesla stock. The discussion is far from over, with some analysts predicting a crash and others expecting profits of over 100. However, 2 indicators make the leader in electric vehicles shares exceptionally appealing. Visit our channel to view more of our videos if you enjoyed this one.